and then we'll answer it towards the end of that section. And if I don't think we have anything else other than that. And if there's anything that comes up along the way that we don't have an answer for, we will absolutely get that to y'all after the training. But hopefully we'll be able to answer everybody's questions now. Stephanie, if you could go ahead and start the slide, that would be great. I'm going to turn it over to the person that's going to be talking about the allowable cost section. So again, if y'all have any questions, feel free to reach out in the chat and then we can get that answered for you.
All right. Hi, I'm Robin Alexander. I'm on the fiscal team, and I'm going to be talking to you guys first about allowable costs. So you can also look at Chapter 14 of the OCJP Grants Manual and also the Fund Source chapters for more information on allowable costs. So you'll want to make sure that the costs that you charge to the grant are consistent with your organizational policies and procedures. When we fiscally monitor, we do look at your policy and procedures and make sure you are following those. You want to make sure that whatever you charge is approved in the grant budget. That's a big one. Do not charge anything that is not in that grant budget unless you do receive approval from your program manager to do so. You must follow the federal fund source guidelines. That's another big one. Just because something's allowable on one grant, one fund source, it might not be allowable on other fund sources. So you want to make sure you're aware of that, especially if you have several different grants with different fund sources. You want to make sure that you have consistent treatment of similar costs. You'll want to follow the generally accepted accounting principles. You'll want to make sure that whatever you're charging is ordinary and necessary for operation. Can't just go buy whatever. And the supplies, because you have supplies in your budget. Make sure that you actually do need it for the operation. You want to make sure you have documentation of your methodology, and whatever you purchase, it must be reasonable, allocable, and necessary. That's a big one that we like to use. You just want to make sure that you do indeed need it for the grant. Next. All right. The next we're going to talk about prior approval. And you can see the grants manual chapters 14, 15, and 17 for more information on this. So the following budget items must be pre-approved prior to being implemented by the subrecipient. So salary adjustments. If you're going to make any type of adjustment to the percentages or any type of salary changes, you must get prior approval from your program manager. A big one is overtime. If you're going to charge any kind of overtime, please make sure you get prior approval. And I will say, make sure that you save that prior approval so that when fiscal comes out to monitor, you have it ready to go and you can show us, hey, I have approval for these things. Staffing changes. So if a position is added or deleted from the budget, so if someone comes, you hire someone or someone leaves, you want to make sure you communicate that with your program manager and have prior approval for that. Capital purchases, anytime you're going to purchase anything in that line item, you do have to have prior approval. Depreciation, sensitive minor equipment, and you can see the property and equipment chapter of the OCJP grants manual for further details on that one, but you do need prior approval to purchase laptops and other sensitive minor equipment. Furniture, that's another big one. If you're going to buy some furniture, you do need prior approval. Clothing and uniforms, except for emergency clothing from victims and clients. You do need prior approval for that. And then meeting rooms and audiovisual services, and then indirect costs. So funds may not be moved into or out of the indirect costs without prior approval. And this request must be accompanied by a copy of your approved indirect cost rate or an approved cost allocation plan, which includes an indirect cost rate. And you should have an approval letter from your cognizant agency on that. And Wendy is going to talk more about indirect costs later on. So another thing we're going to talk about is the 20% rule. And you can see Chapter 17 of the OCJP Grants Manual for more information on this. So agencies can move money. You can move money within the approved budget lines utilizing the 20% rule. And you do not have to get prior approval for that, except if you use the personnel line item. So to move money in or out of the salaries line, you will need prior approval from your program manager. The 20% rule must be calculated on both the to and from line. So you have to make sure you have money in both lines. And then once a line is increased by 20%, it cannot be increased again. So if a line does not already have funding, so if your supplies has no funding in it, you cannot use the 20% rule to then add money into the supplies line. So it has to already have a budget to use the 20% rule. And the 20% rule cannot be used on in-kind or indirect cost. And then prior approval items that we talked about on the previous slide, those items still need prior approval. Next slide, please. So here's an example of the 20% rule. So it says there is $500 in the budget's travel line, and you want to move more money into the travel line. The maximum amount that you can be moved into the travel line is $100 for the entire fiscal year. And we get that by 500 by 20 times 20% equals 100. So a separate budget line must be reduced by the corresponding $100, and the reduced amount cannot exceed 20% of that line item. And then here's a note, please do not change column 8 of the OCJP invoice for the reimbursement form. So just because you're doing the 20% rule, you're going to leave that grant budget to stay the same as it was. And our fiscal people will know that that is what you're doing. And Lori's going to talk more about the reimbursement workbook later on in the presentation. So now I'm going to pass it over to Kumba, I believe.
How are you? My name is Kumba. I will go over the honorable cost. You can have more detail on chapter 15 on the grant manual. These are the lists that are not allowable to be charged against the grant: the construction, the land acquisition, some planting, compensation for travel for federal employee, bonuses or commission, military type equipment, lobbying, fundraising, corporate information, state and local tax for which the agency is exempt, gifts or gas card, and late fee. These are all not allowed. Next. Also, you can see entertainment, sports, VAS, passport charges, tips, bar charges, alcohol beverages, laundry charges, lodging costs and access for therapy them for events of 30 or more participants that are funded with the OCJP award. If the lobby cost exceed the therapy them, none of the lodging costs are allowed to be charged. Food and beverages costs are highly allowed. Gifts, trunk, memorabilia, community items, tricks items such as hats, mortgage, portfolio, t-shirts, coins, gifts, bags, etc., regardless of whether they included in the conference name of OCJP, DOG, or OCJP logo and logos must not be purchased with the basic supply that are necessary for during the conference. You can charge the folders, the name tags may be purchased. Next. Also, other level costs like legal fee, costs in applying for the grant, any expenses prior to the grant award date, the first class travel, management, administrative traveling, source of contracts, without a prior written approval from the Office of Criminal Justice Program, costs incurred outside the project period, and costs that are incurred either before the starting of the project period or after the expiration of the project period are not allowed. Certain packages, compensation that employer provides on employee who has been laid off, whose job has been eliminated with through mutual agreement, has decided to leave the company, or who has passed away with the company for other reasons. Interest, credit card fee, membership fee to organization whose primary activity is lobbying, director insurance, these are all prohibited towards the grant. Next. This is the audit threshold. You can have more detail. You can see chapter 5 on the OCJP grant manual. The non-governmental agency who expend at least 1 million under the state contract with establish a subrecipient relationship, which may include federal pass-through awards during a year, are required to have a single audit. Not just an audit financial statement. A single audit can be done, including the internal control and the CFR and schedule equipment for federal award. Any cause of non-performance in accordance with the appropriate federal regulation are unallowable. If the solicitors expend federal funds less than the amount required for a single audit and still elect for contract within a certain certified public accountant to perform an audit, those costs cannot be charged to the federal grants. If any agency meets the audit threshold and required to have a single audit, the provided audit cost will not be considered an allowable cost. The cost for the audit would not be allocated across the source using a fair and equitable method. Next. I will transfer it, I think it's to Allison.
Okay, I will be talking about supplanting. And you can see chapter 15 of the OCJP Grants Manual. Federal funds must be used to supplement existing state and local funds for program activities and must not supplant those funds that have been appropriated for the same purpose. If reviewers think that supplanting may have occurred, then the applicant or recipient will be required to supply documentation demonstrating that the reduction in non-federal resources occurred for reasons other than the receipt or expected receipt of federal funds. For certain programs, a written certification may be requested by the awarding agency or recipient agency stating that federal funds will not be used to supplant state or local funds. So here's an example for supplanting. To help clarify the difference between supplementing and supplanting, we provide the following example. State funds are appropriated to hire 50 new police officers, and federal funds are awarded for hiring 60 new police officers. At the end of the year, the state has hired 60 new police officers, and the federal funds have been exhausted. The state has not used its funds toward hiring new officers, but instead reduced its appropriation or appropriated the funds to another purpose. $110 new officers would have been hired using federal funds for 60 officers and state funds for the 50 officers. Keys to avoiding a supplanting violation are to hire or purchase only new, additional personnel or equipment and or technology, and or other approved costs. Pay only for personnel hired, equipment purchased, and or other approved costs incurred on or after the award start date, and make sure the grant-funded purchases or hires are over and above the number of positions, equipment, and or other approved costs that otherwise would have been funded by the grantee. And there's a link provided at the bottom of that for the supplanting recorded training. Next. And also, I'll be talking about match. See Chapter 3 of the OCJP Grants Manual. Match can be cash or in kind. Match is restricted to the same use of funds as allowed for the federal funds. Match must be directly related to the project goals and objectives and must be documented in the same manner as grant-funded activities. Match cannot be source. Cash match is budgeted in the line in which it is expended, not in the in-kind line. For example, if the cash match was used for supplies, it should be reported on that line of the reimbursement invoice. If it was used for specific assistance, it is reported in that line, and so on. Cash match must be documented, verifiable, and used for allowable costs. In-kind match. Some examples of in-kind match would be donations of expendable equipment, supplies, space, value of time contributed by volunteers if the services they provide are an integral and necessary part of a funded project. In-kind match cannot be counted as match until it is used in the project. For example, goods given to a client. Value placed on donated labor must be consistent with rate of compensation for similar work and must be documented in the same manner as paid staff. Signed timesheets that document actual hours worked under the federal or under the funded project. Value placed on donated space must be consistent with fair market rental values and documented. At least 3 comps from realtors and then use the average from those. Space cannot be owned by the agency and then donated to the project. Space owned by the agency is handled by charging depreciation. Document methodology for value placed on donated goods, such as goodwill. Next. The in-kind match test. Agencies with in-kind match can only draw down in-kind in relation to direct expenses. In other words, you cannot overmatch. For example, if your year-to-date direct expenses are at 85% of the amount budgeted and your in-kind is at 100%, then you have overmatched. Each reimbursement invoice has an in-kind match test above the signature lines. If this number is negative, it means you have overmatched. This number cannot be negative on the final reimbursement invoice. It notes on your May invoice that the number cannot be negative in the next month. Below is how this appears on the May reimbursement invoice. The number is negative, so the agency has overmatched by $12,081.53 and must bring that to zero by the June invoice, or the state will reduce the June invoice by the negative amount.
My name is Chelsea Morrison, and I'm going to go over purchasing policies. This can be found in chapters 12 and 13 of the Grants Manual. All non-federal entities were required to be in compliance with the Uniform Guidance Purchasing Policy by FY18. Code of Conduct and Purchasing Guidelines begin with 2 CFR 200. Highlights include Code of Conduct, develop a code of conduct that addresses conflicts of interest, gratuities, favors, or gifts, and include a prohibition on soliciting or accepting gratuities, favors, or anything of monetary value from contractors, potential contractors, or parties to sub-agreements. Suspension and debarment include instructions that disallow entering into a contract with parties that have been debarred or suspended and how staff make that determination. Next slide, please. Purchasing highlights continue. So micro-purchasing procedures describe the process for procuring goods and or services when the dollar amount does not exceed $3,500 or per procurement transaction. Only required if you choose to do a micro-purchase. Small purchase procedures describe the process for procuring goods and or services when the total dollar amount is less than your agency's relevant small purchase threshold per procurement transaction. Formal purchase procedures describe the process for procuring goods and or services when the dollar amount is more than your agency's relevant small purchase threshold per procurement transaction. Non-competitive procurement describe the process for procuring goods and or services that cannot be conducted through normal competitive procurement methods, including emergency or sole source procurement. Next slide, please. Cost and price analysis describe the process for performing a cost or price analysis for every procurement procurement action in excess of the small purchase threshold. So phone bids, 3 quotes, etc. Clear description describes staff requirements and required components for writing a clear description of the material, product, or service to be procured. Small and minority businesses, women business enterprises, and labor surplus area firms, the non-federal entity must take all necessary affirmative steps to assure that the minority businesses, women's business enterprises, and labor surplus area firms are used when possible. Describe the affirmative process to ensure that minority businesses, women business enterprises, and labor surplus area firms were used when possible. Next slide. And I'm going to pass cost allocation over.
Okay, everybody. I'm going to talk to you all about cost allocation. So your cost allocation is a process to determine what your total cost of your project is, and then you're going to describe and how you describe how you distribute all of your costs across your multiple entities or your business units or your cost centers. So if you look at it like this, if you know that you have $100 million that it takes to run your agency department, you've got to break those costs out on each project. And so those projects will have shared costs. And so a cost allocation plan is going to describe how that is done. So it includes both direct and indirect costs. It must include plans for allocation of direct costs as well as administrative costs. So you want to see your total cost of everything, which will be direct and your indirect. So let's talk about a cost allocation plan. It's the agency's written policy describing in detail how the expenditures of the agency are going to be distributed among your programs, activities, or funding sources. So think about your agency's overall activities. Think about your programs, all the services that are provided, any grants that you're getting, what administrative expenses you have, and if you have any type of fundraising or lobbying or any type of expenses such that would not be allowed on the grant, those also have to be accounted for. Second, identify your agency's different types of costs. Whether you have direct cost, allocable, direct cost, indirect, and administrative costs. There should be a fourth one on there in that section just to say unallowable, because that will also play a part in this. So third, prepare a narrative on your cost allocation plan. Describe the methodology that you're using to allocate your costs. So if you have direct costs, you just need to have a methodology in the cost allocation plan describing how you do your direct costs. And then if you have allocable direct costs, that means that you have costs that could possibly be shared among other programs. So you just have to have a methodology written up to show how you allocate those costs among all the shared programs. And that you can put it in a cost pool, or you can allocate it directly. It's a matter of how you want to do your agency. As long as it is consistent across the board, you can create or determine how you're going to allocate those costs, but it just has to be consistent. And so administrative costs are accumulated in a cost pool as well. And at the end of the month, the costs are distributed to each program or activity based on the direct program salaries. So that is an option, but you don't have to necessarily use program salaries. You can use another allocation method, but that's just an example for administrative costs, which would also be like your payroll or HR or other administrative costs that would not directly be tied to the grant, but is necessary to run the program. And then fourth thing that you should think about is submitting your plan to your cognizant agency. So allocable and direct costs. So you can also see chapter 14 of the administrative manual or 2 CFR 200 for more details and in-depth explanation on this, but if it's allocable, accordance with relative benefit specific to the project, and it benefits multiple projects, reasonable distribution. So again, as I had talked about earlier, if something is a shared cost, but it is directly tied to multiple programs, it means it's allocable. So it has to have a relative benefit. It has to be specific to a project. And then it has to have a reasonable distribution. So whatever you choose or however you choose to allocate those costs, it just has to be reasonable. Indirect costs are specifically tied to a project, and those costs cannot be assigned to other projects, such as salaries, travel, that benefits a specific program or equipment, or any kind of subcontract that ties directly to that program would be a direct cost. There are lots of different direct costs, but those are just the main ones that you typically see. So let's talk about what an indirect cost. An indirect cost is a cost with a common or joint benefit to multiple programs and which are not readily assignable to a particular project. This would fall into place with like your electric or your water or your HR or your payroll, your accounting folks. Those are all expenses that are needed to run the program, but they're not directly tied to the program. You don't have to have them to run your program as far as the direct benefit, but indirectly you have to have them in order for your program to run. Cost remaining after assigning direct costs is also a way to pull down indirect costs, and it cannot be allocated if similar costs assigned to a project. Must still follow allowable costs. So this is the big one. If you have your indirect cost pool and you throw everything in there, so if you think about fundraising time or time that's spent, some have lobbying time or whatever the case may be, those are, yes, indirect, but they're also not allowable. So you have to make sure those come out of that pool and you're not calculating your indirect cost with unallowables in there. So let's go through some examples of an indirect cost. Operations and maintenance for your facilities, which is like utilities, service agreements, or your insurance. You have your administrative salaries, such as HR, payroll, or accounting. And then legal services also is considered a form of indirect costs. So there's different types of allocation bases. You can use employees or direct labor, or another allocation base is space or square footage used, and then salary and wages. So employees, direct labor, that could be the number of employees you have, or the direct labor being used. The space is typically a square footage type of deal. So if you have 1,000 square feet space, then you would allocate that space out based on your programs and how many programs share that space. And then you also can use salaries and wages as your allocation base. So let's look at an example of an indirect cost and how you're going to figure out what your cost rate is. So if you have your cost pool of everything that's not directly tied to your program, then you're going to have your indirect cost pool, and you take that and you do some division, and that division, then you're going to take your direct cost base and you're going to divide it by your indirect costs, and that gives you your indirect cost rate. So think about this. Indirect costs are fixed. So if you have a small base, again, that's that direct cost base. It's going to equal a large rate, or a large base is typically a small rate. So if you have, your base, which is all your direct cost, and $1 million in your indirect costs is 1,000 or 10,000, you're going to have a smaller indirect cost rate. So that's what that's talking about. Small base equals large rate, typically, in a large base equals a smaller rate. Agencies must submit an allocation plan to their cognizant agency that includes the indirect cost rate for approval before the indirect cost rates can be charged to the OCJP grants. The cost allocation plan must include the indirect cost rate and the method used to arrive at that rate. So if you are a new agency to OCJP, during your process, your solicitation process, when you apply for the grant, that is something that is asked during that period. So just make sure that if you are aware that you're going to be asking for indirect costs, that you do submit an indirect cost rate proposal, because you cannot use that line item for indirect cost without an approved rate. There is the option of using de minimis. So if you choose to use de minimis, there was a change recently to the 2 CFR 200 that went into effect on October 1st. They have increased the de minimis from 10% to 15%. And so you can just ask to use the de minimis, and that's the 15%, and it is calculated on your modified total direct costs. And that is all you have to do. You don't have to send a plan in to be approved. You just have to send an email and request to use the de minimis rate. So can you go back one? Sorry. So on the modified total direct costs, it's all direct salaries and wages, applicable fringe benefits, materials and supplies, services, travel, and up to the first 50,000 of each subaward. So that is also another change from the 2 CFR 200 that happened and is now applicable for everything going forward. It started 10/1, and that takes the subcontracts. It used to be $25,000, and they increased it to the first $50,000. You can take your modified total direct costs and use the 15% de minimis on. So there's an exclusion to modified total direct costs. That's equipment. So if you've got equipment on your grant, you cannot charge the de minimis to it. Capital expenditures, charges for patient care, rental costs, tuition reimbursement, scholarships, and fellowships, participant support costs, and the portion of each subaward in excess of the $50,000. So if you have a $100,000 subaward, only the first $50,000 is allowed to be charged to the modified total direct cost, or is included in your modified total direct cost and charged the 15% de minimis. Next slide. So the best practices we'll talk about, just make sure whatever you're doing when you're creating your cost allocation plan and your indirect cost rate is that it's consistent and reasonable. You can use what you choose as long as it makes sense and that you're consistent across all your programs. Identify and charge direct expenses whenever possible. Identify primary cost drivers of indirect costs, whether it's salary or space, and use use that as your allocation method because it's the driver and it makes the most sense. Document your allocation methodology. Allocate appropriate expenses. Any unallowables must be removed. So as that example I was talking about earlier, if it takes $100,000 to run your program, but 5,000 of that is something that could be considered fundraising or a nature of sort that's not allowable, make sure you take that out when you're doing your calculations. The same costs that have been treated as indirect costs cannot be claimed as direct costs. Similar type of costs must be accounted for consistently. So let me give you an example of this. So there could possibly be, let's just say rent, okay? You could possibly have rent in your indirect cost, a portion of rent in your indirect cost rate, but you could also have rent that is a direct cost to the grant. Both are the same, but you cannot charge, if you pay $10,000 a month in rent, you can't have it in both places, but you can allocate a portion as a direct expense and put the rest in indirect. So items to include when submitting your indirect cost plan, you need to make sure you have a cover letter in there, your organizational chart to show everybody's titles, and then a cost policy statement describing your accounting policies and narrating in detail the proposed cost allocation plan. The plan must describe the procedures used to identify, measure, and allocate all costs to each benefiting activity. Your financial statements, audited is preferable for the applicable fiscal year, and your personnel cost sheet, which includes fringe benefits breakdown. This is super important when you send this in so we can make sure of what's included in your cost base is applicable and reasonable, we need that personnel cost sheet. So because it'll include the allocation of personnel showing direct and indirect time charge. Continuation on the items to include a listing of all your grants and contracts, program office funding source and total dollar amount, period of performance, and the indirect cost limitations, if any, applicable to each of them. And it must be signed by your authorized official. So whoever is authorized is the authorized official on file is who needs to make sure that that is signed by. So this is an example of a cost allocation plan showing some calculations on what their allocation percentage is. This is not an indirect cost rate, but how their percentage for their allocations play out. So they did this based on total costs. So the total cost of all their programs is $591,000. 591,789. And as you can see to the right, they've allocated those percentages out. So the VOCA was calculated at 20% of their total. Their VOCA sexual assault is calculated 18%. And you can see that as you go down, it calculates all them out based on total costs. So it says all indirect and overhead costs are distributed to the program using the percentage outlined above at the time of the expenditure is recorded using a job cost code in the accounting software. So they're allocating all the indirect cost out based on this cost allocation. And that's typically how you would see it in your cost allocation plan, how you are spelling out how they're allocating those costs out. Again, keep in mind, if it's not allowable, though, those need to be taken out or considered whenever you're allocating your costs monthly. This is just a look at a budget that was submitted for when they've submitted their cost allocation plan. This just shows each column has a column for all their programs and the amount that it shares based on total budgeted costs. And this would be something we would typically see whenever we're looking at the cost allocation plan or your indirect cost rate. Something like this should be in there to kind of support and back up what the methodology is saying. So that is the end of my portion of the presentation on indirect costs and cost allocation. I think the next one is on reporting. So I'm going to turn that over to the person that's going to be talking about the reporting.
I'll go over the reporting again. For the reporting portion for reimbursements invoices, we prefer monthly basis or quarterly basis, but very critical if the agency remember to send the invoices, if you're doing quarterly, no later than October 30th, either upload or you choose, elect with your agency. Projects, equipment, summary reports, the reporting period should be July 1 to July 1st on to July 30th. And the OCJP file you can submit online by July 31st if the equipment was purchased during the reporting period. For the program income summary reports, we expect if no income is generated, you can submit one report by July 31st. And or the reporting period, you can choose September 30th, December 31st, the March 31st, and June 31st. But it's due to the OCJP by if income is generated by online by October 15, January 15, April 15, and July 31st. The annual audit financial statements for financial reporting for the Form 99 single audit. If they spend 1 million in governmental grants, the agency is due by 9 months after the closing of the agency fiscal year. You can submit that one online. The email is ojjp.fiscal@cn.gov. for the non-notes of audit, single audits, the agency annual 90 days after the agency fiscal year ended, they submit the reporting to the same above address, the OCJP.fiscal.cn.gov. And I come to the next person.
Hello, everyone. My name is Lori. I will be going over the invoicing and the interaction with OBF. So to begin with, who is OBF? OBF is the fiscal unit for Department of Finance and Administration, responsible for processing the monthly invoices for over 400 subrecipients. The main person that you could reach, it would be, if you have any questions for OBF, would be Veronica Coleman. And then below it will be the financial management, grants management, benefits accounting, accounts payable, administration, and procurement. OBF interaction. How does OBF interact with subrecipients? At the beginning of a new contract, OBF will provide an electronic invoice workbook. This workbook contains monthly invoice templates, total contracted budget information, tracks year-to-date actual expenditures, address changes and contract amendments. OBF will send an updated workbook whenever there is a change to the contract or the subrecipient's address. And I'll just say, just to note, if there is a change, that will be something that you will need to reach out to OBF to let them know that there was a change in an address or whatever the case may be, and then they can send you an updated workbook. And so here we have an electronic invoice workbook. It will have the name and address of the contractor, subrecipient, the contract number. It'll have the invoice date, the invoice number, which the invoice number, if you see on the right side, it will be the bottom one. If you see that, that will let you know what month and date that this invoice is for. So for example, this is showing that it's for July 2018. And then it has the vendor number, the amount due at the bottom, and then it will have where you, if you have match, or if you don't, it will have the percentage under the reimbursement percentage. And then to the left, under budget line item categories, this is going to be where your budget is. So for each line, you can see under the total contract budget, that's going to be the total that you have in your budget. So you would put whatever you have for the month, you will put under this month's actual expenditures, and then it will automatically go over to the year to date. And then you can see the difference of what you have on there. And then at the bottom, you need to just make sure that you sign your name, title, and date. And actually, this is an old invoice. They have updated the workbook for FY25, and there will be 3 spots to sign. So the one on the left will be where the subrecipient signs. The one in the middle will be where OCJP signs, and then the one on the right will be where the accountant signs. Next slide. Invoice submission and payment. All completed monthly or quarterly invoices should be submitted to OBF for payment. Please email these to obf.grants@tn.gov. With each invoice submission, please include a certification statement with each submission. Sign the bottom of each invoice and time, and that could be done electronically. You don't have to go in there and sign each one. OBF processes all invoices to issue payment. If you have any questions, the OBF will be the one to reach out to if you have any questions about payments or any other issues with your invoices. OBF reviews all audit confirmation request and sends the payment list to the subrecipient's auditors. So this right here is just a side-by-side. On the left will be your budget that you have, and then on the right is the workbook. So you can see in the left column where it says grant contract, under your budget, that is going to be your total contract that you have for each line. And then if you look to the right under the workbook, under the total contract budget, those amounts should match. If they do not match, then we cannot process the invoice. We will have to figure out what's going on with it. But as long as those amounts match, then the invoice should be good and you should be able to process it. But that is how you can tell if your budgets match. If you look at the total project on the grant, and then if you look at the total contract budget under the workbook. The electronic file has one tab for each month and will automatically calculate year-to-date actual expenditures. Do not edit PO or contract numbers. So anything that OBF sends you, we just ask that you do not go in and update any information or change any information on there. If you put your amount under this month's actual expenditures, it will automatically calculate that under the year-to-date actual expenditures. So you don't have to go to that column and update that amount. It will automatically do that each month for you. So really the only thing that you have to fill out is this month's actual expenditures, and then just make sure to sign at the bottom. Electronic invoice workbook. Only input numbers into this month's actual expenditures. If the budget is amended, OBF will create a new invoice workbook. Your reimbursement file cannot be updated without an approved amendment. Nothing will change if 20% rule is used. So if there is a time where you have to use the 20% rule, that we don't have to update your workbook for that. So there's no need to reach out for OBF on that. Your workbook will remain the same. We will just use the 20% rule. Electronic invoice workbook. Changes to address or bank information must be submitted to supplier maintenance. It has listed the phone number at 615-741-9745, or you can email at supplier.maintenance@tn.gov. All changes to the electronic file must be made by OBF. And here is a copy of the verification certificate. So as I stated before, with each invoice that is submitted, you must submit a verification certificate, which looks like this. You will fill out the address the payment should be sent to and the organization that it is going to be paid to. OBF interaction. Each agency that is not able to submit their final invoice by the end of their contract will need to submit an accrual liability form. The agency will submit this accrual liability form to obfgrants@tn.gov. It is important that these are filled out and submitted in a timely manner, so invoices are not considered late. Each year, the dates will change on when the final invoice and/or accrual will need to be submitted. So each year, it will vary from when your final invoice will be due, when your accrual liability form will be due. So each year that will change. It will not be the same. Accrued liability. What is an accrued liability? The accrued liability is for when services are rendered or items are received by June 30th, but the invoice is not ready to be submitted by the due date. It is your best estimate of the amount the state will owe you for expenditures your agency incurred for the period ending June 30th of 2020 25 for this year. So to the right, I just attached a copy of the accrual document. It does have the dates from last year. So those, just don't pay attention to those dates. They will change this upcoming year. But I just wanted to show y'all how the document actually looks. So it will have that agency name, the vendor number, contract PO number, the accrued liability amount that you are accruing for, and then you would just have to sign and date at the bottom. For other training opportunities, CFO cost principles or training, you can go to the website that it has right here, and then go to module 4. And then for any other OCJP trainings, you can copy this website here and it will take you there. And here's all the OCJP fiscal unit contact information. So if you have any questions, please feel free to reach out to any of us. We are all happy to help and answer any questions that y'all have in regards to anything that we went over today. And Wendy, I think it is back to you now.
So I think Jeremiah has put in the chat the link to go to the attendance part. So if you need that, go to the chat and he has that up there. So in order for you to receive credit for the training, please make sure you go to that. I don't think it's the one that's in this slide. I think it's the one he's put in the chat. Jeremiah, if you could confirm, that would be great.
Yeah, happy to. So either will work. The tiny URL link just makes it easy to like type in. We designed that back before we were doing it on Teams, and so it's just kind of a carryover from there. What we've learned though is some people's systems don't allow those redirect style links. So if you look in the meeting chat, I've got the direct link that you can click on, which typically doesn't give anybody any problems. The reason why we do it this way is that what I've seen over the years is when I send out the meeting invites, they tend to get forwarded and shuffled around, which is perfectly fine. But rather than email stuff out and then have them get forwarded and shuffled around again, what we do is we use this form in order to take attendance and also as a mailing list for the materials. And so by signing up on this just one time today, you'll get all the materials related to both the program and the fiscal component. So do make sure you check the chat if you hadn't already. Click the link and fill out the form. It'll only take you about 2 seconds. If your program manager happens to be missing or your fund source is wrong, a couple of people identified that this morning. I think we've corrected it, but just in case something's still missing, it doesn't matter what you put there. We'll still be able to match you up and get all the materials. So the most important thing is just clicking on the link, making sure your name, agency name, and email gets in there so we have a good contact to get the materials out to. And the question in the chat, will there be a recording of this? We are recording this meeting. This is the first year that we've recorded it. We're going to have to figure out, since particularly the training from this morning is quite long, about if we need to do any edits, but we are intending on pushing out both the slides and a copy of the recording to the audience. And so if there's any other questions, if there's not any other questions, we should be good.
Jeremiah, I wanted to go over, there was a few questions in the chat and I did respond, but I just wanted to kind of
oh, sure.
To talk about it. So there was a question in regards to the 15%, the change from the 10 to 15%. That is going to apply to new contracts only, going forward from October 1st on. So if you have a new contract with OCJP or in the works with one, because it only applies to anything that's done from October 1st on. So we're not going back and changing existing contracts. That would be entirely too much. So we are going, and plus the funding's not there. And so we will do that with any new contract starting October 1st. And the same thing goes with if you have a subcontract in your contract that you are using the de minimis for, that $50,000 is per year, per contract year. So if you have a 3-year contract with OCJP, that 15% will apply to every year of the first $50,000. So hopefully that's a little clearer. And the last thing I want to say on the section with the invoicing and the accrued liabilities, I cannot stress enough that becomes a huge issue at the end of the year every year. Please make sure you get those accrued liabilities in. If you know you're not going to submit your final invoice within the first week of July, just make sure you make a note somewhere that those accrued liabilities have to be in. Because they're going to start not paying invoices. And so I don't want anybody to miss out on any of their funding because they missed a deadline. So please ensure when those get sent out at the end of the year that you are filling those out and that they're being sent in a timely manner so you don't miss the deadline. That's really all I had. Thank you.
Wendy, it looks like there's an additional question that just popped up in the chat. All grants require it's a question. I guess, do all grants require an activity report for personnel charging their time to the grant for OCJP ride? And will this need to be submitted with the invoice every month? So I think the answer to that question is if your grant employee is not 100% on the grant, it is our expectation that they're keeping an activity log, which documents their hours as well as a timesheet to show what's charged to the grant. However, those are not, unless you're under a specific stipulation from your program manager or on some sort of probationary status where we are requiring you to submit backup documentation with your invoices. If you're not in either of those circumstances, you would not need to provide the backup documentation with your invoices. We will check that backup documentation when your project's monitoring. Wendy, I don't know if you have a different view or anything you want to add to that.
I was going to say the exact same thing. Thank you, Jeremiah. Yes, that will be reviewed upon monitoring. So just make sure that it's being done and tracked monthly, but you do not have to send that in. We will check that when we come out to monitor, when Fiscal comes out to monitor.
Awesome. Well, OCJP staff will hang out another 2 or 3 minutes just in case another question filters in. But if you don't have any questions and you're not curious as to if any more comes in, this concludes our training. We appreciate you spending so much of your day with us and hope you have a good weekend. Fiscal team, I think there's a question that just came in for you.
Hey, Wendy or Robin, do y'all mind checking that? I believe I know the answer. I don't want to steer them the wrong way though.
So typically you want to send reimbursement in for expenses that have actually happened, not that you've recorded. You want to make sure that the payment has went out because we're a reimbursement only. So we consider reimbursement only is if you've actually expended that money, as in physically wrote a check for it, as opposed to just booking it on your books. Hopefully that helps.
Give it just a couple more minutes.
I think a good cutoff would be like 2:10. So at 2:10, if nobody else has any more questions, we can um, end the training, the presentation.
Sounds good.
I'll stay on here till at least 2:10. Okay, y'all. I appreciate it. I hope y'all have an awesome weekend.
Thank you. Have a good weekend, everyone.
Bye.
Thank
Thanks,
you.
bye.
You too.
Thanks, everyone.
Be safe.